Hello traders, Gary Wagner here. It is Friday, finally, the 13th day of December, approximately 12:30 in Honolulu, which puts it about 5:30 in New York City. And this is the daily report for gold and silver, our weekend review. We are going to cap the week off with modestly lower prices in both gold and silver. However, when we take a look at our weekly charts, you will see we had a modest to nice gain overall on the week. Want to start with silver today. We had silver coming down a little bit, but I first want to pay attention to our daily chart. And what I find interesting in our daily chart is we have been talking about, of course, we entered a long position back at around 28.10, but we have been talking about what I believe to be a hard resistance line right at around 30.82. And you can see this chart we have been using along with this line. I think I put that line in Tuesday or Wednesday of this week. And what I found interesting when we take a look at yesterday's high was the fact that we came just butt up against it. In fact, if we go and look at our cursor with our crosshair, we will see I was looking at resistance at 30.84. The actual high that we hit was about 30.60, so about 20 cents off that. Does that mean that this market's under pressure and could come down? Well, my sentiment is we could in fact see a small retracement, because when you consider the way that this market has moved, it came off a substantial low, the low back at the end of last year, roughly at $26 per ounce, and from there moved up almost to $31 per ounce. It wouldn't surprise me to see a small retracement. Now, this would be a 23% retracement of that move, possibly down in this area right here. We can run a Fibonacci retracement to see, but for the market to retrace a little bit before going into a next leg, why, that wouldn't surprise me at all. We'll go ahead and convert this in two ways. The first thing I want to do is convert it into a Heikin Ashi, so we can see in terms of the shorter term moving averages, because that's what that's based on, what that's looking like. And what we get is this. When we look at our daily silver chart, you'll see, you know that what I look for is really two things. One, the absence of this lower wick. That's quite critical on a Heikin Ashi. And the second is the actual size of the candle itself. You can see how large these candles are in comparison. The market really corrected, or let's say consolidated is a better way to put it. Then we had that second kind of burst of steam, but look at it here. We've got that doji again. Doji, of course, is when the market opens and closes around the same point. It's a series of consolidation. Does that mean that this is going to be a pivot point? And by that I mean, is that a point in which we will see this wave count do something like 1, 2, and then 3? Or is it going to be like something we saw last week, where it simply was a resting point? I will send out special trade alerts probably on Sunday and Monday. If we start to see weakness in this market, we're probably going to go ahead and pull profits. Now, traders, all I have done is converted our daily Heikin Ashi into a weekly Heikin Ashi. This is still cash market of silver, and you see a little bit different kind of analysis. And what we see in terms of a longer term picture is really this week gave us the first sign that in fact this market has bottomed and is going to begin to move up on a longer term basis. So for physical traders, meaning those who buy, hold, and accumulate, this isn't a time to liquidate. In fact, this is probably a time to begin to add to your holdings. As you can see, we've gotten our first sign. Now, that sign is not the kind of strength that I want to see. Take a look at what happens when silver runs. You get this consolidation for a long time. Here you had it for a couple of months, but when it does run, you see you get that absence of tail. You get these nice bodies with no lower wicks, and it's not until you start to see these doji-like candles then going to red, but then that's just a burst because it's a small point in which the market itself is consolidating before moving up. So traders, I wanted to now spend some time and take a look at the gold market. Gold today was off by about $8, had a low that took it about $15 plus at one point, closing right around 1638, 1639 bid-ask spread. Same way that we worked with silver, I want to look at it from a couple of different charts. First chart that I absolutely want to start with is our daily chart. Here's what I'm finding interesting. The market did come up. It really barreled through this 61% retracement. And of course, the retracement that I am looking at, it's a shorter term retracement, begins in July of last year, right before we had that tremendous rally that propelled gold from below 1,500 to above 1,900. That signaled really the top of this massive rally that we saw when we consider that over the year we ended up with a 10% gain, because even with this tremendous correction, this is our A, our B, and our C, which of course makes up a major 4. This would be the major 4 right in here. We still eked out, when we look at the market from the beginning of the year, we still eked out, as I said, a double-digit gain, although not as nice as what we've seen in the past. When you consider the low in February, that would be right here, right at around 13 to 19, and then back down, it still showed us a good couple $100 gain on the year. Quite pleased with that. Where do I think the market's going from here? Of course, we took a long position at 1580. And my sentiment is, and I've been talking about this all week, if we see weakness at around 1645, the first thing I said, if it was unable to take out 1645, then in fact we would look to either cover the position or really raise those stops up tight. We did actually take that out. We had a high yesterday of 61. You can see that right in here, but that was not to be sustained, and neither was the price point of 1645. We saw weakness enter the market. You've got this red candle here. It's got that long tail. That's showing you that extreme low and that extreme high. That tends to happen when you see a market increased in volatility, and it isn't showing consolidation as much to me as it's showing the potential for what I call a pivot reversal. What do I mean by that? Well, if we consider the fact that I believe that we are in an intermediate 1, and right now we would also be in a major 5, I also believe that the major 5, unless it's a truncated major, is absolutely going to take us to a new high. 5 will always go above 3 in most normal circumstances. So what am I looking at? Well, we might get something like this. We get a 1. This one is concluded. We get 2. We get a 3, 3 is long, we get a 4, and then we get a 5, taking us to new highs. That might be the way this market plays out. In fact, we still could be in the wave 1. We're not going to really know unless we see how it reacts Sunday, of course, Australia, when the market reopens, and then again on Monday to see if there's a follow-through and this market actually begins to sell a little bit lower. I want to go ahead and convert that to a Henkin, and then I want to take a look at the weekly. So traders, what we're looking at is our daily chart. This is now in Henkin Ashi format, so it's a Japanese average chart. Japanese average charts differ from a standard candlestick chart in that they take the data points from yesterday's trading activity and compare it to today's, and that's how you'll sometimes get green candles even on a down day, such as today's activity. You can see it's still green even though we had a lower close on the day, but when you compare the market itself to yesterday's activity, that's how you get it. However, in terms of what it is showing us, we are seeing a couple of things. First of all, we lost the tail over the last couple of days. Real good strength. This is that point it consolidated just like silver. Also, we've got the doji again. So this doji can be indicating one of two things. It could be indicating a potential top in the market. You got that right in here. Or it could simply be indicating a resting point. My sentiment, my gut tells me that we will probably see this market go from, and these are the intermediate counts, but go from here, and we probably will see some sort of a correction, maybe as low as 1610, 1615. that wouldn't be that unlikely to me before this market heads higher. What does that mean? That means for shorter term traders who are following and trading the futures markets, you might want to go ahead and pull profits if we see any sign of weakness and look to re-enter from the long side, as I said, around 1610 to 1620. Are we going to get there for sure? Well, of course, I can't guarantee it, but it does seem to be a likely scenario. Traders, this is our weekly chart of gold. And when I look at this in terms of a longer term view, we still had a week that opened and closed higher. It was a solid week, but it didn't show us nearly the kinds of gains that we saw, of course, on the prior week. The prior week was one tremendous week in which we really saw this market move strategically higher. Now, I'm going to go ahead and convert that to a Heikin Ashi. It'll be our last chart of the week. And as you can see, on a weekly basis, you are getting a candlestick that has the absence of tails. It's not really a large body, but it's our first indication on a longer term basis that absolutely this correction is over, one, and two, we are headed towards higher prices. Does that mean that it won't come down to 1610 first and then go higher? Well, it certainly could, but in terms of our weekly chart, there can be no doubt it is showing us that we have probably left our correction behind. This has been Gary Wagner wishing you, as always, good trading. Guys, have a great weekend. For our weekend review subscribers and my daily subscribers, we'll talk to you Monday. Sunday, I'll send out any kind of trade alerts to let you know it's time to exit that trade if I start to see weakness. Have a great weekend. Bye-bye.